Welcome to this new edition of ARGOPulse September 2023.
Recent months have seen investors regain confidence in the economic cycle's resilience due to slowing inflation and higher base rates. As a result, investors have started shifting away from their expectations of future rate cuts. Therefore, saw the long end of the yield curves go higher during the month, making bond prices fall, which in turn weighed on equity returns. The global macroeconomic backdrop remains sticky, with a mildly positive economic output, decelerating headline inflation, and persistent core inflation. Most major central banks are nearing the peak of their rate hike cycles, but have indicated no imminent rate cuts. Some of the same risks observed since the beginning of the year remain, including economic growth challenges and tightened lending conditions for both corporates and governments. Shifting from the past few months, expect heightened volatility in August and September due to tight lending conditions and economic weakness in some countries like Germany. Consider investments in selective capital discipline stocks and sectors, such as financials, which benefit from those higher lending conditions. Given the high volatility, we continue to monitor cautiously the long end of bond yield curves with potential bear repricing, whilst the shorter end up to 2-year offers better value today. Additionally, defensive assets such as gold can be attractive in the context of a diversified portfolio. Finally, the current volatility in rates and FX markets can be exploited through structured products. We have updated our risk matrix slightly this month. In general, investors are wary of the effects of the tightening of credit conditions on the economic cycle. Key concerns include 1. A policy mistake by a central bank provoking financial market panic. 2. A marked slowdown in economic growth in the main Western economies. And 3. A sharp bear repricing of the long end of the yield curves, causing leveraged corporates to struggle with their debt pile. In this context of cautious optimism, consider selectively investing in the markets. We are recommending 2 main investment themes this month. Looking at the industrial sectors, the automotive industry is undergoing a transformation driven by the race towards electric vehicle capability. Chinese auto producers, with control over the entire manufacturing process, including that of batteries, are gaining momentum, creating shifting dynamics among major players. As such, the main automakers can be harvested through structured products. Now, spotlight on a transformation happening in the food industry, driven by sustainable consumption and sustainable production practices. Disruptions in this resilient industry present investment potential. Finally, we are keeping an eye on equity volatility and selectively seeking entry points to get back into structured products selling volatility to generate performance.
Contact your Lincius Partners representative to explore further how to take advantage of the current market conditions.